going on, guys? Welcome back to another new video on this channel. In today's video, we count down the top 9 stocks that will be upgraded this month. The world is slowly on recovery from the corona crash, and everyone seems to be concerned to know which stock is the best catch, even as investors remain optimistic. And as we know, stock markets have risen sharply since the low point recorded in March 2020. The dip of the past few days may offer a good entry point to pick up some interesting stocks. However, if you miss the opportunity of the dip and the crash, then worry less because there's a golden opportunity for you to pick up from these top 9 promising stocks. Be sure to watch till the end to get updated on why these 9 stocks are golden eggs that you must have in your buy basket right now. Consider subscribing to this channel and hit the bell notification icon to get all the latest episodes whenever we post. So, let's dive in. Number 9. ASML. Renowned as one of the 3 largest suppliers of chip-making equipment in the world, ASML stock has been upgraded due to the current global shortage of semiconductors, which has fueled demand for ASML machines. We think the scarcity will have a positive effect on sales this year. Considering that already ASML has returned about 36% so far this year, outperforming the computer and tech sector in which it operates by over 20%, clearly paints a rosy future for ASML. With a market capitalization of $280 billion, ASML stock has recorded an amazing 87% growth for the past year. Currently trading at $675, ASML is for sure a strong buy considering that it has maintained a steady positive uptrend year to date. ASML's earnings outlook is stronger, and we expect this to continue even as the world adopts a 5G wireless network and higher power computer applications. The stock of this company is projected by analysts to hit $745 towards the end of the current year, and we do not doubt that, going by the current increase bull run. Number 8. Robert Half International. Not very many people know much about Robert Half International. However, this is an American company that provides temporary and permanent personnel and consulting services. The company is on track for above-average growth in sales and profit margins over the next 5 years. The share price of Robert Half International has increased by 45% this year. Valued at $10 billion, Robert Half International is currently trading at $89, with a steady uptrend eyeing towards $102 projected by close of 2021. According to analysts, Robert Half International is generally undervalued, and this provides a good entry point for investors. The company's shares have performed better by 74% over the past year, outperforming the 67% rally of the sector it belongs to. It's just a month since Robert Half's last earnings report, and the shares have grown by 3%. Now, this shows a positive outlook for Robert Half, and we expect an increase in earnings in the future. Number 7. Citigroup. Citigroup is one of 4 international megabanks and financial service companies in the U.S. We upgrade this stock based on the anticipated strong growth in Asian markets and a rebound in U.S. consumer credit for the remainder of 2021. Even though Citi experienced a rough 2020 coupled with losses from loans and regulatory issues that saw its valuation decline, the company has restructured its management and we expect it to trade better this year. The company's new CEO has already embarked on corrective measures, including making an additional $1 billion of investment, and now Citi is back on track with no hiccups. With the 31% stock growth this year, Citi has won back investors' confidence, and it's expected to become more stable going forward. Currently trading at $78.70, there's no doubt that under the new management, Citi will manage to reach and even surpass the projected share price of $85. Number 6. JPMorgan Chase Co. JPMorgan Chase, like Citigroup, is one of the big 4 banks in the U.S. We upgrade this stock due to the strong recovery of the U.S. economy, the favorable U.S. consumer climate, and persistently strong capital markets. Now, considering that JPMorgan is the best managed diversified bank in the U.S. with great opportunities in both equity and fixed income trading, you can never go wrong investing in this company. JPMorgan has surprisingly outperformed its peers in the Big 4 by having its net interest income increase significantly over the past 5 years. JPMorgan has a market value of around $497 billion and it's currently trading at $164, slightly closer to the projected $168 share price. Number 5. Taiwan Semiconductor Manufacturing Company. Taiwan Semiconductor Manufacturing is the world's largest chip manufacturer. Due to the global shortage of high-quality computer chips, we upgrade this stock. Looking in the longer term, we expect 5G, the Internet of Things, and artificial intelligence to star as the greatest growth drivers for Taiwan Semiconductor. It's estimated that the revenue of the company will grow by 17% in 2021 and have a 16% revenue growth in 2022. Currently trading at $117, Taiwan Semiconductor is experiencing competition from other upcoming players in the industry. However, we expect it to outperform analysts' predictions since it's a dominant leader in the industry. With a market capitalization of $552.5 billion, coupled with a wise allocation of capital, Taiwan Semiconductor has a great potential of surpassing the $132 projected stock price. Number 4. Rite Aid Corp. After a price drop of no less than 90% in the past 5 years, this American pharmacy and drugstore chain is on the rise again. We upgrade this company basing on the fact that it should benefit from the rollout of the corona vaccines, on which high profit margins can be achieved. In addition, booster vaccinations could provide long-term revenue streams stabilizing the stock of this company. The stock, which has in the recent past performed poorly, is now on correction and currently trading at $18.30, slowly climbing towards the projected $23 at the close of 2021. However, the over $1 billion edges on the good revenue it's receiving, which of course will help the company to stabilize soon. Number 3. Johnson & Johnson. Johnson & Johnson is the largest pharmaceutical company in the world. This company has received a lot of attention in 2021 after discovering the COVID-19 vaccine, which is currently in high demand even as the economy recovers. We upgrade J&J since its existing drugs such as Stelara, Imbruvica, and Darzalex are in high demand and will see a bull run, which of course increases the company's value. Besides, Johnson & Johnson is working to launch another 14 novel drugs by 2024, which will increase the company's earnings. Johnson & Johnson has become an investor's favorite based on the fact that it has consecutively raised its dividend payouts for nearly 60 years to the current yield of 2.5%. And so you similarly won't go wrong adding Johnson & Johnson to your investment portfolio. It's a credible company that has earned investors' confidence, and this is not going to stop considering its diversified revenue portfolio. With revenue streaming in from its pharmaceutical products, consumer health products, and medical devices, Johnson & Johnson will for sure surprise analysts. With a valuation of around $446 billion, Johnson & Johnson is currently trading at $169 on a steady uptrend focused towards the projected share price of $177. Number 2. Ovintiv. Formerly known as Encana, Ovintiv is one of North America's largest oil and natural gas exploration and production companies. Crude oil prices have risen by 70% in the past 6 months. Thus, the higher crude oil prices and a recovery in demand this year are the main reason why we choose to upgrade this stock. Its stock price is projected to hit $30 towards the close of 2021. If you're speculating entry, then Ovintiv is just the right stock to add to your investment portfolio. Wondering why? Well, the fact that Ovintiv has managed to attract close to 70% of its institutional investors clearly shows the credibility of this company. Similarly, Ovintiv's stock has grown by 6.5% in just 1 month since the last earnings report. Number 1. The Mosaic Company. And finally, the Mosaic Company is one of the world's largest producers of phosphate and potassium nutrients for crops. We refer to this share because of rising fertilizer prices and the rosy outlook for global demand for agricultural products. That provides a good reason enough for you to consider this stock in your investment portfolio. Phosphate prices bottomed in mid-2020 and demand from Brazil and India has been driving them ever since. The company is similarly looking into diversifying its revenue sources by making wise investments in a related sector, a move that will help boost profit margins. With a current trading price of $36, Mosaic stock is projected to hit $40 at the end of this current year. So there you have it, guys, top 9 stocks that will be upgraded this month. Which of the 9 stocks above are you planning to add to your portfolio? Let us know in the comments section below. If you enjoyed watching this video, kindly give it a thumbs up. And if you're new here, subscribe to this channel and turn on notifications so you won't miss out on our next episode. Thanks for watching, and I'll see you in the next one. Goodbye.